Good afternoon, everybody. This is Live Trading Talk, Market Wrap with Patrick MontesDeOca. What I would like to do on this afternoon here, Friday, January the 14th, to share with you a report that we are publishing in the Associated Press, and I wanted to show a preview and have you listen to this report. (2022) Gold. The Feds have nowhere to run. Summary. U.S. retail sales went down 1.9% in December, the biggest drop in 10 months as Omicron shortages and higher prices affected the market. If higher inflation is taken into account, then retail sales were even lower. Inflation is at the highest level since 1982, and consumers are starting to notice. The Fed is talking about raising interest rates, which is creating a false sense of security. We may be about to see a major correction in the markets when the Fed raises interest rates. MontesDeOca said, we are looking at a different environment in terms of inflation. Fundamentals. U.S. retail sales went down 1.9% in December, the biggest drop in 10 months, as Omicron shortages and higher prices affected the market. Economics forecasts a lower decline. If higher inflation is taken into account, then retail sales were even lower. Sales rose sharply through most of last year before tapering off in the fourth quarter. The best cure for higher prices is higher prices, Equity Management CEO Patrick MontesDeOca said, and we are beginning to see that. Inflation is at the highest level since 1982, and consumers are starting to notice. In 1982, inflation compared to today was different. Greg IP in the Wall Street Journal argued that today the inflation rate is rising, while in 1982, inflation was falling. Core inflation in 1979 hit 13.6%. Fed Chairman Volcker set out to crush inflation with credit controls and tight monetary policy. His efforts pushed the U.S. into a brief recession and interest rates hitting 19%. By the summer of 1982, inflation and interest rates were both falling sharply. 4 decades of single-digit inflation followed. Volcker's high interest rates pushed Mexico into default and led to a crisis in Latin America. Unemployment also rose, reaching highs not seen in decades. Mexico defaulted and devalued its currency overnight from 16 to 46 pesos to the dollar and then far higher. Inflation became rampant in Mexico. This is an example of what interest rates can do when you have a high debt, such as what we have today. The Fed is talking today about raising interest rates, which is creating a false sense of security. We may be about to see a major correction in the markets when the Fed raises its benchmark rate, MontesDeOca said. We are looking at a different environment in terms of inflation. As inflation soared in the 1970s, gold hit $1,900 before collapsing to a couple of $100. It stayed low into the 2000s when we saw the beginning of the bull market in gold ignite. We are looking at a potential increase in inflation, MontesDeOca said, which will put a tremendous pressure on the Fed to raise interest rates without crippling the economy. The market already factored in four Fed rate hikes for 2022. And we are already seeing declines in many sectors, all based on pure rhetoric. Interest rates cannot go up in this environment since consumer demand is already fading. People are not coming back to this economy. Economic growth is not going to occur. We're going to see a slowdown in the economy, which will put more pressure on the Fed to talk about raising rates. The markets are going to realize that it's all talk because the Fed can't raise interest rates in this environment. we will see an explosion in prices in precious metals and Bitcoin. In gold, the market is acting inverse to the fundamentals. Inflation is not going to go down. It's going to remain with us for a long time. If we come to believe that things are going to get more expensive over time, then the values that are being adjusted may be with us for a long time. We will probably see inflation heat up as we see more supply shortages. In response, silver and gold will go up aggressively. Silver is the most oversold commodity on the board, especially in relation to the fundamentals and industrial demand. Silver is an explosive product right now, MontesDeOca said. Featuring HECLA Mining Company, HL. For silver, we trade HECLA Mining. It is potentially an explosive stock. We are recommending to our subscribers to build a position in HECLA. HECLA produces nearly half of the U.S. silver. It is operating North America mines and several pre-development projects for precious metals and base metals. It is the oldest precious metals company in North America, listed on the New York Stock Exchange as HL. We recommend buying and holding HECLA. HECLA has gone through a 60% Fibonacci retracement since the low of 140. It rallied to 679 by August. We corrected into October 2020 and then rallied from that 448 to 944 level, which was made on May 31st, 2021. HECLA has been in a corrective pattern to a low of 454 in October 2021. Our indicators show that the correction potentially has been completed. We are looking at a 38.2% correction using Fibonacci arcs. This is a long-term play that we believe you should buy and hold. The company has derivatives and options you can buy to build a position, but we are strongly recommending it is a buy and hold. We are looking at 829 as a target. You could almost double your investment in 2022. It is a great opportunity if you want to load up the truck in silver. This is a tremendous opportunity to buy gold, silver, and Bitcoin markets. If we do not see 4 interest rate hikes in 2022, MontesDeOca said. Testing 1, 2. We had a day trade today on silver. It was a quick trade, 6-cent profit here. We activated the buy trigger from the buy 2 level of 22.86. We completed the target of 22.99. We took out about $250 on a day trade, and we are loading up with HECLA, basically. It's one of the most established silver mining companies in the stock, in the exchange, and it's one of the largest silver producers in the US. So we want to own this stock as part of our portfolio, in addition to some of these other derivatives that we've been trading here, and focusing on the long term. For the remainder of 2022, there's a very good possibility that we could reach 829. So it's been a little bit of choppy here this week with regards to the Fed's policies on interest rates. But as you can see, the economic indicators that we're getting here seem to indicate that even though we're getting some inflationary pressures due to the bottleneck of supplies that we still have, price pressures are going to continue for a while. But the question is this transitory or is it permanent? And I believe that we're looking at potentially some of these prices to be permanent as we recalibrate into a new value based on the US dollar and based on the amount of money that is being printed, which is daily continuing to devalue the purchasing power of the US dollar. Continue to hold your long-term core gold long positions in derivatives, shares, and use any of these corrections here in this metal to add, in particular in silver. As once again, I believe the silver market is probably the cheapest asset on the planet. Load up the truck with silver, my friends, and have a great weekend. I'll talk to you next week.